So in this video, we're going to be going over liquidity sweeps. But before we fully understand what a liquidity sweep is, we just need to know what liquidity actually is. LQ stands for liquidity, which essentially just means money. It's also a point of interest for large institutions to get their orders filled, because obviously their orders are very large. They use these POYs to get their orders filled in order to send price into the total opposite direction. And there's two different types of liquidity. We have this BSL, which stands for buy side liquidity, is found in the highs and gives opportunities to sell. We have sell side liquidity, which is found in lows and gives opportunities to buy. So if we start with buy side liquidity, so we have a high here, sweeps this high, gives a reaction back down. I can find another one right here. We sweep this high, gives a reaction back down. Even right here, we have a high here, sweeps this high, gives a reaction back down. Even over here, sweeps this high, gives a reaction back down. It's also important not to mix the two, like break of structure and liquidity sweep together. If a candle closes above a high, it is a break of structure. However, if it wicks through a high or a low, it is called a liquidity sweep. And that just shows us, okay, that markets are being, market has filled big institutions' money to send prices in the total opposite direction. That's literally all it means. Even over here, we have a high here, price wicks through it, gives a reaction back down. We can keep looking for these actually. So like, for example, this wouldn't, technically it is a liquidity sweep, but if you look on like a lower time frame, you would have been very difficult to look for like a 1 minute break of structure to confirm that we're going back down. Even over here, we sweep this high with this candle, gives a reaction down. Sweeps this high with this candle, this wick, gives a reaction back down. Even here, sweeps this high, reaction down. Right here, sweeps this high, gives a reaction back down. Here as well, sweeps this high, gives like a mini reaction back down. That's buy side liquidity. So buy side liquidity, remember, is always in the highs. Now we can just move over to like sell side liquidity. So sell side liquidity gives opportunities to buy. So remember, it's found in the lows. So if I go to this low, as you can see, price pushed down, wicked through it, collecting these orders that resided below here, reaction back up. We have a low literally right here, wicks through, gives a reaction back up. Low here, wicks through, reaction up. Low here, wicks through, reaction up. I'm just gonna keep repeating that until it's stuck in your head, until like you see the charts, kind of like how I do. Wicks through, reaction back up. Like even in this sense, going back over to like buy side liquidity, look at this. We candle close above this high, so it is not a liquidity sweep. That's a break of structure to the upside. Oh whoa, come on the screen. So we have this low, wicks through, reaction up. Have a low down here, wicks through, reaction up. We have a low here, wicks through, reaction up. Wicks through, reaction up. Wicks through, reaction up. I'm trying to find where it didn't actually do well. Like even though we got a liquidity sweep, it just didn't go into our favor because it just seems like I'm just showing you like all the good ones. Wicks through, reaction up. Low, wicks through. you would have got a semi reaction upon the 1 minute, but ultimately you would have just kind of just dumped that down on you. So that's like an example where it would have never really done that well. That's just one already. Where can we find another one? This low over here, wicks through, reaction up. So that's like in the most simple way, like to understand buy side liquidity and sell side liquidity, and hopefully you understand what liquidity is. All it is just money in the market. So when you're seeing, like, for example, these lows, you should be just seeing this. That's all that is to you. Money. That's it. Just see it like this. Like, for example, there's money here and price is the rubber. Rubber takes money from the bank and pushes all the way up. That's how you should just see it. Could find like another example for sell side liquidity anyways. Takes this low, reaction back up. So what I want you to do is go onto your chart and just keep practicing that over and over again. So do find like 10 examples of buy side liquidity being swept, and then 10 examples of sell side liquidity being swept. This will help you out a lot once we go over to the strategy part to this boot camp. Right now we're just going over to like the little fundamentals, and we're just keeping it as dumbed down as possible. Liquidity is just money in the market. So when you're looking at these markets, you just got to identify where is the money, where did people make money, and what is the market structure. Those two have to correlate. So for example, if the trend is bearish, you only want to see BSL get swept, which is the highs, and then you want to go on the lower time frames and look for confirmations to sell. For also, let's say we're in a bullish trend, you want to look for SSL to be swept, which is the lows, and then find confirmations for opportunities to buy. So yeah, that was the quick skim through of what liquidity is. Hope you enjoyed.